Okay, so in this video I'll be doing a bar replay session, just showcasing the past month on the GER40 with my swing strategy. So let's get to it. So start of April, which is there. So I'll try and give as much detail as possible without giving everything. There'll be small details that I will just miss out. But yeah, I'll give you as much detail as I can really. So time frames used is the 4 hour and the hour mainly, and then daily I will have a little look at just to see key levels, key areas it's coming into where the 4 hour could change or why the 4 hour is changing trend basically. So looking at the daily is very bullish overall. We've actually now come down and swept some daily liquidity. So what I would expect here is the daily trend to continue and the 4 hour to then realign. So the 4 hour will be bearish at this point because we had a daily pullback. So yeah, the 4 hour is bearish. Now where would I mark up my swing structure? So we broke this high, being there. Ooh. We pull back. We then end up wicking these highs twice. So not the best, but yeah, this is fine. So we do take out these highs here. It is 2 wicks. It would be nicer if there's a break of structure, but yeah, they're only wicks, unfortunately. We then pull back down. We ran this low. We then actually come up and we sweep this high. However, on this feed, it doesn't sweep it. But literally every other broker on this platform on TradingView is swept this high, and the brokers that I've been trading with, they all swept that high as well. So we all took out this high essentially, and then there were some really nice trades here. There was a long here and a loss there, and another long. Where is it? There's a long there, which is a winner. It then swept, gave a loss, and then a re-entry there. Yeah, so there was 2 nice winners to this high. So we end up sweeping that high, we then come down, we take out this low here. So really this should be my swing high and potentially the swing low down here. However, when I have big swing ranges like that, I kind of cheat and I go with what is the most relevant high in between to make my swing range smaller, because usually when you have very big swing ranges, it becomes irrelevant when you start to see price action build up within, like, internally. So this should be the swing range, but this is massive, so I'm going to shorten it down to what the most relevant range is, and it'll be from this high to this low. So for example, if we start to see bullish order flow here, if I was to still have this as my swing range, I'm still looking for shorts potentially when it's completely irrelevant anymore. The most recent price action becomes the most relevant thing on the screen. Sorry, let me not delete that, get it back up. So this is my swing range, so I'm looking for shorts. I'm looking to sweep a high and take a short entry. The only liquidity on my screen at the moment is this high here and then the swing high. So let's play it on. We get a sweep here, however we close, once taking that liquidity, we close all the way down here at this point, so I can't get in the trade there already. It's already played out without me. Playing on. Still looking only for a sweep of a high, and then we absolutely melted the downside from the Trump's tariffs. And we put in a low. So what would my swing range be now? It would either be from this high or this high here. Either or doesn't really matter too much. Playing it on. Can we get a sweep of a high for a short? Okay, so we don't. But what we see here now, let me get this up. We had an area of supply here. Why is it supply? Because it's an inside bar and then a push away. We go down to the hour time frame, so it's basically a pullback and then a push away. So it's an area of supply. We can see when we came into it, we react from it and then it breaks it. So I can justify it being supply because we can see those things I just mentioned. We break it, we pull back down, come back into this demand wick, and we're now taking out the high. So I have confirmed bullish order flow on the 4 hour time frame. However, we do still have bearish structure, but once you see bullish order flow, you either seeing bullish order flow for it to then continue bullish and take out these highs, or it's just building liquidity. Now, with a big swing range, as I said previously, usually when you see these big swing ranges, they become irrelevant once you start to see internal structure go the other way. So let's see that if that could be the case. So I'm happy to take a short or a long at this point. Okay, we get a sweep. Let's go back one candle. So we print a low, we push higher, we come it down, we take the low. A sweep of 4-hour liquidity. We've got 4-hour bullish order flow, longs are fine. The 4 hours closed, we go down to the hour time frame. What candle took the low? It's this bullish candle. We have tagged into it. However, we're now currently below the entry of the the high of the candle. So I would usually use a stop order. And in this case I can, because I'm currently below the high. So if we were currently above the high, I'll do a market execution, but because we're below it, I'm going to do a stop order. So buffer below the low, and my target would be the internal high, as it's counter trend but pro order flow. So I'm targeting the internal high at this point. Do we tag in? We do. Let's go to the 4 hour. Okay, so not hit TP yet, but we're starting to see some liquidity built. Almost hit TP. Okay, so we have a low down there that we've taken. We've also taken this low here. So this low becomes irrelevant because I also took this one now. So let me backtrack one more. So we've taken 4-hour liquidity being that low and this low. So the 4 hour is closed. Let's go down to the hour time frame. What candle took liquidity? It's this one here. Sorry. And we are within that range still. Do we tag into it? We don't. We continue one lower, two lower. So we've now had 3 candles below the liquidity. And this one's tagged in, so that's fine. The max I'd do is 3 candles, unless I then see a 4 hour retracement candle. So I'll need to see a 4 hour bullish candle if it traded 4 or 5 candles below. But yeah, we don't need to see that in this case. So we're in the trade already. In this case, it does get a 4 hour bullish candle, so it would be nice regardless. So say we traveled 4 or 5 1 hour candles below this liquidity. Because we've seen this bullish candle retrace there, I then could just market execute there if I wanted to. But we're in it from this hour entry anyway. Playing on, so this is a really nice risk reward for that one. Same target, and we get a really nice run to the highs there. So we had 2 trades, original trade down here, and then the scaling. Now usually the scaling gives you a less risk reward, but in this case it was a lot smaller entry, so we had a really nice risk reward there. Now in terms of management, I do 75% off the initial risk at 5R. So we hit 5R there, so at that point I'd be 75% off the trade and let the rest run to the high. So essentially you're banking 3.75% at this point if you're risking 1%. So you're 3.75% banked, and then you're leaving the 0.25% risked to this high. So in terms of maths, so it's 12.07R times 12.07 times 0.25. So overall, this trade with that risk management would gain 6.76%. This one here as well, and that actually adds up to perfectly 11% basically between those 2 trades. So a really nice start. Playing it on. Now, the way I view the market here, as I said, when I have big swing ranges like this, and I start to see clear intention, clear internal structure going bullish in this case, I then basically ignore this swing range. This swing range becomes irrelevant to me now. looking for shorts does not make sense to what is happening in this. What's happening here is way more important than what happened here to the left. I've learned that with experience, where this same like price action would happen. I would look at it as, okay, I've got bullish order flow. I'm in this big swing range, so technically I should be still looking for short. I could still be looking for short still, but it doesn't play out. It very rarely plays out. So I don't care about that swing range now. I'm now essentially cheating the concept of swing structure. I'm now going to look at internally what would be my swing range. Now it would be this low to the whenever we print a high. So now I'm saying the market is bullish. Playing it on, I'm only looking for longs at this point. Oh, let me backtrack. We had a quick little trade there. So here we print a high. We have a small pullback, being that inside bar, and we took out the high. On the hour time frame, I look a little bit nicer. So the sweep is this low here. So push up, push down, a push up. Sometimes if it's not very clear on the 4 hour, I will use the 1 hour to clear up a little bit. But usually I need to be able to see it on the 4 hour, and for me that's enough there. It's enough to be liquidity. It's not as nice as taking one of these lows because it's not as big a structure, it's not as big as a range, but it's definitely liquidity there. So the 4 hours close. Once we've taken out liquidity, I move down to the 1 hour, and it's very obvious what candle we want to get in from here, being this one there. Do my buffer. And my target is the high. We're tagged in, and we get a nice quick TP back to the 4 hour. Playing it on. Now we almost get a sweep here of this 4 hour low, but it doesn't, as you can see. So we have that low, we have this low, and then we have what would now be my new swing low. So this is my new swing range currently. We wick the high. Okay, we take out the high now. So now I've printed another low there, and this will now be my range. Okay, so we've taken this 4 hour low, as you can see. The 4 hour is closed. I go down to the 1 hour. Now it's a massive candle. I know I'm not gonna be able to like get a trade here. If I was to try and put an entry there, I can't get a 1-to-1 to the high, so I don't take it. I know it doesn't tag in anyway. We continue lower. So that's one candle. That's two candles, and we get tagged in from the second candle. Entry there. Minimum I target is a 1-to-2. I can get a 1-to-1 to the high, and then extend it to a 1-to-2. There. In fact, we also could just wick this low here as well. However, because we're trading in or already tagging in from this original idea, that's fine. That's absolutely fine there. We're tagged in, and we get a nice quick TP. Now with this one, it actually TPs on this Thursday. Now this Thursday was a bank holiday for some of the countries in Europe, and the GER40 was closed. Other than this one broker, I don't know how, but all the other brokers were closed and showing no price action. So I'll show. Let's get a couple up. So I'll play it on. You can see. So this has price action. These lot don't. They just gap up. So yeah. So Wednesday to the Friday. Wednesday to the Friday. Gap up. So how that's possible, I don't quite know, to be honest. But yeah, so I couldn't close my trade, so I basically get TP coming into the Friday morning when all the brokers are back open, and you can close it for whatever you want. When you be awake, you wake about now, so you can take about 3 point. You can take about 3.3 are there, maybe take about 3.5, whatever you want. And in fact, if you were to leave it, we run up here, but that's not quite how I trade. So minimum you're taking, I don't know, 3.3 something off from that. Once the market opens on the Friday. So that is the past month on the GER40 for my swing strategy. So it's 1, 2, so it's 4 for 4 on trades. What was this? This was a 10% gain, right? Overall, yep. This was 3, 6, so about 16.7% gains over the past month from 4 trades. So a really nice run. So yeah, that's the end of the video. I hope you guys enjoy it. I'll see you guys whenever I make another one.